Yeah, welcome back. So I figured we'd take a quick peek back at our XRP chart from last video, see how it held up to what we did, right? With our little rube in the box. On the daily, orange, yellow, green, shot through the blue, straight up to the red, back down to the blue. Now it's retesting the green. So looked at something interesting. I was wondering, like, why, why we have these, intermediary type stoppages. So I believe we talked about how you can get price targets. We did the fibs, right? So I did this fib retracement here from the previous high down to our black line, which was, we have these two down here. These are support and resistances. So I picked a black line. Thought this was pretty interesting. So you have a fib land right on our orange line, just off the red. There, you have them here, right? Got them right here. So, I mean, if you ever wanted to test what you're doing with the chart, could easily do multiple things, and would that take me all of like a few minutes? When I did it, I just kind of did this, like, what's it look like if I use this support? What if I use this support? And honestly, it's not really that much different. I mean, you pick the bottom support, you're pretty close there, So you're, you're pretty close here. Anyway, that's our XRP chart, right? So I'll just do a quick shoot it down to smaller time frames so you can see how it worked out in smaller time frames. And you can see it's hanging in there. You got red, yellow, I guess that's orange, whatever, red, orange. Where's our green, orange, blue line. There's another green line. There's a red line. There's your fib. There's your fib. So you can just, it's holding strong. So my price target I'm looking at, maybe I should have trimmed some here at 285. Yeah, maybe. But this doesn't look terribly like unbullish to me, right? You kind of got a little cup fake breakout, small down to another cup, zoom it in there. And it might be easier to see on a smaller time frame. We'll take it down to 5 minutes. So the structure here, you got here, higher, mid, lower. What do you got here? Crash, higher, mid, lower, handle. I'd probably, oh yeah, I was gonna say, I probably guess you'd probably have a very similar structure and crash, mid, lower, handle. just for fun. Let's go take a look at the 1 minute chart here. You just can't make this stuff up, man. You know what I mean? What do you got here? Crash, higher, mid, lower, your handle. I bet you if I took this down to a second frame, I mean, you can almost see it right there. How ridiculous this stuff is. It's so lazy. Crash, you're gonna have your higher, and then it'll come down here a little bit to the lower. Probably test this guy over here at 227 or something like that, and make a little handle, and then do it on like the 1 second time frame. Yeah, and then some fake news will come out and be like, "Oh, XRP is awesome," and then everybody goes, "All right." So speaking of that, I'll show you something here. I saw it was kind of funny. Not yet. Here you go. Morgan Stanley says it's time to sell the dollar. I mean, that's like almost like you really sell the dollar, right? I mean, you do, but like you got to understand the mechanism, right? You're selling the dollar, you're buying something else with it, right? So I'm saying sell the dollar. It's like, hey, it's time to buy stocks. I'm like, is it? Well, let's go take a look at the dollar. Let's see how accurate Morgan Stanley is. So, it's just UUP, the bull dollar chart from Invesco. I don't know, man. It doesn't look terribly bearish to me. You kind of got a breakout of a cup and handle going here. Look, I even did a little retest. I mean, I'll take you over to the DXY in a minute, but it's like where you get like more time. This only starts, 2007. It's vintage year. So yeah, so here you go with this, right? So then you zoom it in, zoom it out, and zoom it in. What do you got over here? Well, let's take a look. Collapse this here. There you go. So, yeah, looks horrible. I mean, who would want to buy this? You know, I mean, all of this looks terribly bearish to me. You've got, your cup and handle with your false breakout in the middle. Yeah, I mean, that was probably a good day in the market. Yeah, and you got the little sign of strength here. You got your breakout, back test. It's pretty common for this back test to back test over here or something that's like over here. Then you got your handle. So let's go look at that's on the weekly chart. So let's go look at this on a smaller time frame. What's going on the smaller time frame? Wow, that looks horrible. I couldn't believe anybody would want to buy the dollar. Crash, false breakout, reviewing. What happened over here? Oh, yeah. Let's see. So you've got, these are always like these kind of things are like these double cups, right? And yeah. When did they put this out? Let's see. Yesterday at 7:02, and yeah, right at the bottom, right here. Oh no. Where? There you go. So they tell you to sell the dollar here, and then it does all this. All right. super accurate. Let's see what this looks like on even a smaller time frame. It doesn't have a lot of liquidity, so a lot of times the smaller time frames you can't really see it that well because you get little tiny bars. But oh, look at that! Another cup and handle. What's going on over here on the 1 minute? What happened today on the chart? It's even multiple days still. So all of this, right? And everybody's watching this. Oh no, it's selling off. Oh, let's all pile on. And then after hours close, all that accumulation on the way down, and then boom, pop it up. Yep. I wouldn't buy the dollar. Horrible. It looks terrible. All right, look how bad it looks on the DXY. You know, like this. This is terrible. Yeah, ignore all this mess. Can I get rid of this stuff so you don't have to look at my mess? Well, whatever. You get the point. You don't want to know what goes through my mind when you look at this stuff. I may or may not have been looking at this for some time. So that's your dollar since 1971. I don't know, man. Looks pretty horrible. All right. Yeah, you got your crash, false breakout, second cup, sign of strength. Got your handle forming over here. And what's that? Oh, that's that cup and handle we were just playing with, isn't it? You know, if you go down here to the 1 hour, you can see we've had this marked out here. I've had this marked out for a while. I was double checking my biases with my father-in-law. Here you go. So we're looking at this, right? So this is what everybody's looking at. Oh my God, it's a head and shoulders. It's a head and shoulders. Look how far I've zoomed out. I've zoomed out like a whole month or two. Right. So there's your blue bar. The blue bar is a long-term resistance from way back here. All right. Zoom out, man. You've got so many touches. How many touches did it take to get to the center of the dollar lollipop today? Now, keep in mind that the DXY, that's why I used UUP, does not update after hours, or it's very laggy, one of the two. Can't really tell. I think it's laggy. So here you've had this long-term uptrend, right? So there's your blue. Oh, come on. You suck. There. Long-term uptrend. It's your channel. When it broke here, right? We were looking at this. I'm like, okay, if it breaks here, it's going to come down here. And then here is, realistically, right, your head and shoulders. Check this sneaky nonsense out. That's why you don't jump at the first thing, or you definitely set stop losses. Look at this nonsense. They did one of these jobs. Big red candle, big green candle. It has some name in candles. I can't think of it right now, but that's like a liquidity grab, right? They grab everybody's stop losses, and then anybody who jumped in a short here, they liquidate them on their stop losses, and they got all that liquidity, and then off and running they go, right? So this is why they say wait for a full candle close below your support line. Neither of these candles closed completely below your trend line. And it might move. Maybe it's here, wherever you want to put it. I don't really care. If it, dropped down here and then this green bar came up here and closed, my line's there, your line might be here. Say it comes back up here and closes here. Well, that whole candle now is below there at your support line, which now makes that a resistance line. Now you can more comfortably enter a short position. You could do it. You could wait for a second candle. A lot of times, if you're trading, day trading on a 1 minute candle, you get this candle close, and then it's like, or sometimes that candle will just drop, right? But then you come over here, right? So what happens now, right? We already know that the UUP is up here somewhere, right? It jumped up here, jumped straight through and closed up here. This will catch up at some point. But yeah, closing up here invalidates all of this. Because now you don't have, well, you do. I mean, you still technically do have this head and shoulders structure, but now instead of that being more likely a head and shoulders, now it's either a retrace, 50%, maybe it's pumping up here to 61, maybe 75, maybe it goes 100%. Maybe it did like a lot of things did recently, where it just went straight through and just kept going, right? Yeah, but you close up here, now you're making a cup and handle, right? So, all right. So anyway, that's your dollar. Sell it right now. Do it. Don't even think about it. Morgan Stanley said to do it. You better freaking do it. All right. Do not do any work for yourself. Don't think for yourself. Don't spend any time at all learning anything about trading. Just blindly follow what these people say, and make sure you definitely follow that guy on MSNBC. All right, that's your dollar. So something else that happened to pop across today, this morning before work, well, is, where is it? DXY. There he is. Bank of America. Everybody knows at this point, I'm sure you've been pounded with it, and everybody's like, Warren Buffett, he's so stupid. Why would he possibly sell Bank of America and Apple? Look at them. They're at all-time highs. Look, he wasted all of this, right? So where did he start selling? Well, just a quick Google search. He sold it. So this says that he's been selling over the last 3 months, Bank of America. So up here, October 17th this was written. So over what, second quarter, whatever you want to call it, probably longer, right? I mean, maybe first, second quarter. So that's when we arrived, was first, second quarter. So there you go. Warren Buffett starts selling in July. There's July. What an idiot. I can't believe he would start selling right here after he's been holding for, well, let's zoom out. When did Warren Buffett buy? I don't know. I don't really care. He's a buy and hold guy, so I'm assuming he's been buying it for a long time or holding it for a long time. What an idiot. I can't believe he would sell Bank of America here. What a dumbass. what would possibly make him want to sell right here when there's all of this to go? Oh my God, what a loser. And how much does he have left? And I'm sure he's still selling, right? Because they can't just drop it all at one time. They're not allowed, right? So that's a big red bar over there. So, if you couldn't sell all your stock at one time and you knew that this big ass red bar over here is going to come out, are you going to start selling here and then bag hold here? But Dan, to cut that out. Um, that looks like a cup and handle. Weren't we just talking about cup and handles? We were. But don't forget one of the things I keep mentioning. Very important. False breakouts. Maybe. I don't know. Right? I wasn't familiar with this chart. Well, let's, like the dollar, like XRP, a lot of things. Zoom out. Let's take a look at what Bank of America looks like historically. So we have something to work with here, right? Do I see any matching patterns? Because unfortunately, or fortunately, depending on how you look at it, charts are repetitive. I gotta tell you, like, it's like lazy repetitiveness. Like, so, do these look familiar at all? Well, sometimes you go to different time frames and things look a little skewed, but this one in particular, not really hard to find matching shapes. Huge run up, jaggedy drop down, gap down, flat incline, night time. That was pretty brutal. Wonder what that was. Oh, 2006 going into 2007. Probably a good year. Yeah, so let's take a look at this when it's a little cleaner, right? So you're on a different time frame. Shrink it down a little bit. Maybe that candles won't be so skewed, or maybe it'll just do all kinds of stupid crap. But I'm not editing anything because I'm trying to do this because I thought this was extremely interesting, and I did not have time to look at these or record anything over the weekend. So here you go. Jagged, crash, gap. What are these vertical lines that I put in here? Well, I just lazily taking a dump. Don't have a lot of time in the morning. I'm sure you don't either. Ironing clothes. Lazy. Well, look. What do I see here? Peak. Large crash here, right? That's pretty. These are some pretty big crashes. Then you get this more vertical incline here, and then night. Okay, so I'm saying this looks very similar. We have a big gap here and a flat. My eyeballs, not what Morgan Stanley's telling me. Crash, jagged structure. Now, gap. Yeah, there's a gap there. Smaller structure, smaller gap. The box there is always a little bit more easy for me to see. And then, what do you got? You've got this flat structure, large crash, more vertical incline. So what's that tell me? Well, that's interesting. What did I do over here? I picked some peaks, right? So I found 5 significant peaks after the fourth one, a crash, right? So 1, 2, 3, 4, large crash, 5. 1, 2, 3, 4. Large crash. 5. And you can zoom in a little bit. This is a weekly chart. Well, what kind of time frame did we have here? So I didn't put this line at the perfect peak, but you got a little wavy pattern here. It's not the easiest thing in the world to see, but yeah, those are it's pretty nasty crashes there, man. Yeah, you're probably so. This is November 17th, and the peak was October 13th. So, so what happened? Oh, there's the peak. So you have this, you get one last push up, and then it was goodbye. So, what can that tell us about what's going on now over here? Well, still a weekly chart. We have this, 2 down days, or 2 down weeks, I'm sorry. So you had a run up, 2 down days, 3 weeks. December 10th. You want to call it 3 weeks in the beginning of January? Okay. You do you. Would I be holding Bank of America here? Do you see all this nonsense? I mean, I personally wouldn't. You could do yourself a favor, right? Because, pretty close. But, nothing's ever perfect. Come into the daily. Let's see what's going on right now. What do we got going on right here? Well, we had a peak, crash, vertical. I mean, I know I'm a pattern guy and all, but this kind of looks like a Head and Shoulders. Like sitting basically at the neckline. Yeah, I mean, could it do one of these deals? Like, give it the old Gonzo nose, like gold and Bitcoin did. They went up, right? They reached up and, well, gold, Bitcoin did anyway, made a slightly higher high and is now pulled back pretty decently. Gold, on the other hand, did not do that yet, which is funny to me because, Bitcoin and gold have been running hand in hand for some time now. And now all of a sudden they're diverging. So there you go. So what do you do with this information? I don't know, whatever you want, man. I just find it interesting. So I just want to do one more thing here. I cut that off actually doing some editing because I thought it was kind of another interesting little thing. This drop right here is 43 whatever dollars down to $2.33. The measuring tool doesn't work on this version. It works on my phone. I don't know, whatever. It's like a 90% drop. All right. If this is doing what this is, a 90% drop from $47, which is oddly similar in price, take it down to like $4. And this drop right here was all of a month. And then you did all this nonsense. I ain't gonna bother zooming it in. Do something for yourself. Zoom that in, smaller time frame. See what happened right there. I'm sure it was a party. So let's I go back to questioning everything, and there's a lot of people you'll listen to out there on TV, on YouTube. I've even kind of had kind of an argument one time through messaging with another guy. They always want to explain everything away, right? Oh, they're doing. Why do they do stock splits, right? So my question is, why did Nvidia do a stock split this year? Trying to make it more affordable. There's all these reasons, right? The main thing I always notice is that they do stock splits around the time that they want to sell. Why? Makes it cheaper for you and me to buy it so they can sell it to us. I, just call it what it is. Like, I don't care why they're selling, but that's why they do that. It's funny. Interesting. A lot of people like SCHD did a stock split this year. All the Schwab stuff. Just saying. Wonder how SCHD is doing. But first, let's take a quick peek over here and see what are insiders doing. Insider activity. They have all this stuff for you. So, I'm sure this was a gift. So, gift, sell. You can click on these and find out what it sell. But I mean, you just get the vibe here. I don't think there's many people at this company who feel very confident about this stock, or maybe the trend of the economy. Pick another one. Pick one. What's everybody love? Everybody just loves Palantir. Palantir, there's cup and handle, extension, overshot. And maybe we'll get around to those. Let's see. Corporate insider activity. Is it going to load up? It's empty. Interesting. Isn't that neat? I wonder if it just needs to reload or something. But I think because now that's getting pretty advertised that they're all selling. You could find out for yourself. It's annoying that didn't pop up. Makes me look bad. What's Microsoft doing? What are these guys doing? Corporate actions. Dividend. Oh, insider activity. Sell. This is going back September. They were buying. Where's September? Oh, right around here. Here. Somewhere. Oh, check this out. Let's see something neat. Yeah, Head and Shoulders, right? Diamond pattern. And you can find all these things. They don't always play out the way you thought they did, right? So I shorted it over here. It didn't hit my target here. But why am I targeting these? Well, on a diamond pattern, or Head and Shoulders, it doesn't really matter. Pick yours, right? Because you take this, flip it down, and you end up like down here. A diamond pattern's the same thing. You take this measure right there, and then you just flip it down, and you end up. So you make two different targets, whatever, right? So it does this. So I'm like, I wonder why it's doing this. And then I'm like, you know what this reminds me of? A Wyckoff distribution. Right? Because here's your diamond, right? And they're always oblong. You can read about it. Don't be lazy. But yeah, so what would this be? This would be your up thrust. It's not labeled here. There's a million of them. Up thrust after distribution. That's what they would call that. Maybe this one has it. No, it's the same one. UTAD. Up thrust after distribution. Yeah. Bump, 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 bump. Bump, 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 bump. Crash. So, this is all have to play out, and it can just go on infinitely. Like, BlackRock's telling you there's no more pullbacks. Oh, boom and bust cycles over. And when did he tell you that? Oh, yesterday. Right there. Yeah. And then you go over here, right? And you look at these kind of things, right? And nobody's paying attention. There's nothing interesting going on in the data, economic data until Wednesday. CPI, CPI, whatever the fuck you want to call it. I don't really care because it everybody just looks at the headline number, right? Oh, well, man, it went up, it went down. Oh, what's that tell me? It tells you fucking nothing, right? I've never really bothered looking at this. It just annoyed me that over the last few months or last month, nobody's even covering this stuff. They briefly glaze over it because nobody cares, right, anymore. All they care about is stocks go up, right? Oh, stocks go up. It's a bull market. Everybody's euphoric, right? Nobody cares anymore, right? If you've been doing financial things like on YouTube, you know that like all summer long, they were live streaming this crap coming out. There's almost nobody doing that anymore, right? And they barely gloss over it. It's like a offhanded, oh, look, the numbers came out. They're fine. Let's see what the market's doing. Annoying me. So I'm like, okay, well, because I'm retarded or crazy or whatever, I'm like, well, is this information useful to me? So let's go take a look at it. Well, wholesale inventories came in up by 0.4. Okay. You can click on them, find out what it is, and their explanation of it. Market Watch actually do a pretty nice job. Actually, um, I didn't even bother looking at this. I looked at this and I'm like, okay, well, what's this? So I looked at this and I clicked on it, and it's like, okay, well, it's consumer. It's a small business optimism, and it's like a little blurb, and it's like, okay, everybody's bullish because they're hopeful that Trump's going to cut taxes. That's basically the gist of that. I'm sure there's more to it, but like I don't got a million hours to do stuff. You don't got a million hours to listen to me. So I'm like, okay. So people are optimistic. Wait, there was actually one little thing that was actually pretty interesting. Go back here. Let's see. Improve from October. Expecting the economy to improve. Highest since June 2020. Yeah, well, I mean, are we in that bad of a situation? I mean, you couldn't have been more negative at that moment in time, right? So, is it that bad that we're optimistic? And then it's like, okay, well, okay, Rose points, highest reading since June 2021. Okay, these are all like super good times. They all ended very well. Yeah. Let's see. Owners reported paying higher rate on most of their most recent loan, unchanged from the lowest reading since before they started raising rates. Whatever. Yeah. So it wasn't like a super like lot here. I didn't really read it all, but this is actually getting more interesting the more I'm looking at. Anyway, positive profit trends was net negative 26%. 7 points from October. Like if if you're an economic nerd, I guess you could call me that for no reason because I don't really look at this stuff, but I'm just looking at it because I'm like, why does everybody else not like it? Everything everybody else likes, I don't like, and everything everybody else is dismissive of, I find extremely useful because this all builds a story. So you take this, everybody's bullish because of hopeful of hope, right? There's nothing positive in here. It's all hope. They are hopeful that Donald Trump is going to save the day. Then you go into U.S. product. Wait, a million of the headline numbers here. I'm jumping the gun. Productivity, flat. Neat. Labor costs, unit labor costs. Oh, these some revisions. Huh. Last month it was 1.9% unit labor costs. Now all of a sudden it's 0.8. They forecasted only a drop of 0.5, but we dropped a point in point 1.5 1.1%, whatever the fuck you want to call it. That seemed interesting to me. That's a big difference in economic numbers when you're timesing that by 12, averaging it out or whatever. So, what does that include? Because I don't know. So, let me read about it, right? And I'll save you the time of this. You can definitely read it. You can click on it, Market Watch. They do it, and they break it down. The most interesting part about this is how they get this number. So, they calculates the labor cost, hourly compensation, labor increase, blah 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 blah. Takes into account. Here's the thing. Takes into account consumer prices. Right. The only time they mention it, it's like this little tiny sentence, right? But increases when hourly compensation increases, increases in productivity, reduce them. It's probably like it's a math problem. So I got like numerators, denominators, math stuff, blah 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 blah. Okay, well, consumer prices increased 1.8%, which takes into account consumer prices increase. This is not this, right? So this is just a blurb in the middle. So increased in the third quarter, 1.6% over fourth quarter. This is not consumer price. I'm talking about the productivity, right? But now you're down to 0.8. And then they go into calculations, real index, real work, including employees, people who don't work, blah, 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 current business cycle, all this nonsense, labor productivity, annualized rate, reflected in growth, percentage rate, blah, blah, blah. They just go on and on, right? You can break this out and do a math problem, but it's not necessary, right? Because what they're telling you here is everything was revised down. You go down here, they break it down by sector. Manufacturing. And those are not manufacturing. There was non-manufacturing. There was whatever. There was a whole bunch of different sectors. Non-farm sector, manufacturing. This is where they did it. Everything was revised down for productivity, but yet inputs were all revised, all stayed the same or went up. And really, the only thing that went down when you read all this, and I'm not going to read it to you, the only things that went down were in this calculation. The one thing they don't actually go over here, inflation, consumer prices. Of all the things that they do here with their math, if you look at all of it, and I did, everything was the same, higher, wouldn't have affected the number to go down, would have made it go up, except consumer prices. So then you go down further, and I almost didn't even do this, but you go down here and you start looking at this revised measures, right? It's all hidden in this little thing. Nobody reads this nonsense, right? But revisions, right? So the highest magnitude being the downward revision of 0.8% points in the first quarter. Right. So they went back and lowered by 0.8 percentage points in the first quarter. So then you go in here, non-farm, labor productivity output, hours worked were revised. Unrevised, labor costs decreased 1.1 rather than increasing 2.4% as previously reported due to 3.6 percentage point downward revision to hourly compensation. Manufacturing sector productivity revised down due to an increase of down to an increase, right? Revised down to an increase of whatever, reflecting the same revision output. Hours worked were unrevised unit labor decreased of it decreased 5.8% from the previously reported increase of 5.8%. Decrease of 5.8% from the previously reported increase of 5.8%, mainly due to an 11.8 percentage point downward revision to hourly compensation. And it goes on. The non-financial corporate sector. Ooh, what happened at the corporate sector? Productivity was revised down due to an increase of 1%, to an increase of 1%, is down 2.1% to an increase of 1% due to a 2% point downward revision to output. Oh, man, that sucks for the corporate sector. I wonder what revised theirs down. Unit labor costs were revised down due to a decrease of 0.2% due to the productivity revision and a 3.8 percentage downward revision to hourly compensation. So, you look at these, and then you go back to yesterday, or was it yesterday? Or maybe it is last week. Was it last week? And they talked about, what was it? Oh, man. We already got to go find it because it was such bullshit. I want to, where's last week's? Last week's. Right? What was it? It was hourly wages year over year. Up. Up. Hourly wages. Up. Unemployment rate. Up. It's bizarre, man. Yeah, nobody ever looks at this shit. It's like, okay, well, productivity is the same. Costs went down, but somehow wages went up. But when you go to the next week, hidden in the unit labor costs are the revisions to payrolls over here. Maybe I'll. Oh, what do you know? You can't even click on it. How do they get this? Oh, you can't find out. Gotta love it. But yeah, everything's good. Keep buying. You better sell that dollar. And what do you want to buy? You probably want to buy Bank of America because, all the cool kids are doing it. Yeah, man.